Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, June 22nd, 2010. This morning we're talking about budget cuts. Now, the British pound started off the morning lower. It actually looks like it's come back a little bit here. That's one of the interesting things about when I start writing the blog in the morning. By the time I'm finished, a lot of things can change. But the UK, in the UK, they came out with their emergency budget. And it showed a commitment to trying to balance that budget by reducing spending by approximately 30 billion pounds annually. All right, so this shouldn't really come as a surprise to the market. They pretty much said that they were looking to do that, and one of the reasons that they wanted to do that is they wanted to make sure that they could still maintain that AAA credit rating, so that if they do need to borrow, their borrowing costs aren't higher. But one of the fears out there is that they have the potential for sliding back into double dip recession. So as of right now, it appears that to be positive, and we largely expected that. I'm just looking right here at a quick daily chart of pound dollar, and you can see it came off a little bit. It was lower early, but now it looks like it's moving a bit higher as well. We can look at the same thing versus the yen. You can see it just pushed lower, and now boom, looks like maybe higher. So we'll see what's happening there. But now this this happens at the same time that we've got another euro debt crisis sighting out there. Just when you think things start to quiet down and everything looks to be okay, you get some more news out of the Eurozone that reminds you that indeed they still have a debt crisis there. Now, one of the ECB council members came out and said that there are going to be some banks that may have funding problems, and that going forward, they may have trouble getting access to capital. So this happened. In addition, in Spain, the Spanish finance minister said that there are some banks that may need to access their emergency facility, which is similar to the FDIC here in the U.S. So we're going to have to see, if these banks in Spain need to be rescued. But they're going to come out with these stress tests showing their health. I believe it's going to be sometime next month. And that may be a case of, we may not want to see what's going on. It's kind of like, when they say two things you never want to see being made are sausage and legislation. Well, we may not want to see the financial health of some of these European banks. So that's what we're looking at. So there's obviously still a problem out there with Eurozone debt. And what we've seen as a result of that is that we've seen some of these central banks around the world, particularly Russia and some other places, are now going to be diversifying their capital away from the euro a little bit. And the most likely destination is going to be both the Aussie and the loonie. So right here we're looking at the Aussie. Looks like it's a little bit higher despite the risk aversion we're seeing in the market this morning. All right, Australia is a country that has a very strong economy. It's a commodity currency. In addition, their largest trading partner is China. Now, we discussed China's news yesterday that they're going to allow their yuan to more freely float, but that honeymoon didn't last very long yesterday, as U.S. stock market opened much higher, and it actually ended the day negative. Now, what happened there was people started to realize, hey, wait a second. Yeah, they said they're going to allow it to more freely float, but the problem is that they're reducing the peg to the U.S. dollar, but now they want to peg to a different basket of currencies, and one of those currencies in that basket they want to peg to is the euro. Well, surprise, we're looking at the euro and we think it's going to go down. So, it's just another way that the Chinese can sort of manipulate the currency to try and keep it low. So you don't like being pegged to the dollar because dollar's going higher, pegged to something that you think is going lower. So this is the Aussie right here. Let's take a quick look at the CAD, the loonie. They had CPI figures came out this morning, a little bit higher than expected, 0.1% higher to 1.4%. And it shows that the Canadian economy is also strong. All right, and it also leaves their rate hikes on the table. So, there were some concerns that the European debt crisis was going to derail some of these rate hikes, but that doesn't appear to be the case at this point in time. So, Canada and the loonie are also a destination for some of these banks diversifying away from euro. And they're going to get the added potential benefit of any rate hikes that may occur in Canada. So that's sort of what we're looking at today. We've got Japanese yen strength, although it's given back some of its gains from earlier. Just take a quick peek here. You can see dollar was down versus yen, but actually Aussie's flipped around here. Let's just look at this on the 5-minute chart here. Yeah, we can see that, this made a nice little turn there. Ooh, look at that nice long tail on the bottom of a Bollinger Band with a stochastic crossover for you technical traders out there. And the second part of the budget cut deal we were talking about is that Prime Minister Khan pledged to try and balance the Japanese budget in 10 years and reduce bond sales to gain investor confidence. Now, this is going to be quite the task because Japan has the world's largest budget, so we're going to have to see how that happens. But the fact that they're addressing it and coming up with some plans, whether they may be feasible or not, it's anybody's guess at this point. But the fact that they're going to be addressing the situation is seen as positive by the market. So that's what we have today. We're looking at this euro debt crisis. Now it's we're talking about the banks of these different countries. We're going to have to see how they do. These stress tests, when they come out in July, this could be the next little landmine that's been waiting out there, which could potentially take the euro lower. So we're going to have to see. It could be an ugly picture. In the meantime, we've got this Chinese yuan deal. Chinese yuan's actually down today. Everyone's expecting the yuan to appreciate, but what if they end up pegging to euro and some of these other currencies that are going down? They're going to manage to keep themselves low, for a little bit longer period of time. So we're going to have to see how that happens. And then lastly, we're saying that Canada and Australia are going to benefit here from people diversifying away from the eurozone. So we've got budget cuts in both Japan and the UK. We've got in the U.S., dollar's weaker just because we've got all these other things happening, and it's sort of like the funding currency that's sort of flipping around. So that's what we're seeing, and this, we could see some of these currencies begin to trade on their own fundamentals now, as opposed to just this risk on, risk off mentality that we've been seeing. So this may not, this may turn out to not be a lazy summer after all. So we'll have to see what happens, but keep your eyes on the market, and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.